Welcome back, dear traders. The benchmark stock indexes closed with the losses on Friday. All three indexes did not sustain previous gains and failed to rally. A spike on Thursday and faint hopes for recovery on Friday ended up in a nothing in light of a mixed corporate reports by top American banks. Wall Street finished the highly volatile week in the red. The Dow Jones lost more than 400 points, or 1.34%. The Nasdaq tumbled 3.08%, and the S&P 500 sank 2.37% to close at 3,583 points. On a Monday morning, the situation improved notably. The major stock indexes rise and a confidence in the New York pre-market, signaling optimistic opening. The stock market is poised to gain ground after the protracted losing streak. The fundamental background today benefits growth on Wall Street. The S&P 500 is expected to trade in the intraday corridor between 3,590 and 3,710 points. The S&P 500 and the Nasdaq closed with the weekly losses for 4 weeks in a row. Previously, the year's CPI report did not show any signs of easing inflationary pressure. Apparently, the year's Fed will hardly soften its aggressive rate hikes until it finds clear evidence of waning inflation. The inflation report for September did not meet expectations of investors, analysts, companies, and households. In this context, traders raised their expectations of a rate hike by a percentage point in November, and in turn this dampened the risk-on mood. In the closely watched survey by the University of Michigan, the Consumer Sentiment Index improved in October, but inflation expectations went down due to rising gasoline prices. The retail sales data indicated robust consumer spending. Large American banks unveiled mixed corporate earnings reports. On the plus side, JP Morgan shares rose after the bank reported higher than expected profits in the third quarter. On the flip side, Morgan Stanley stock dropped because of a decline in the revenue from investment and banking services by 55%. Wells Fargo reported that its profit contracted by 31% in the third quarter. Citigroup also said that its profits fell by 25%. Mixed financial results alongside a decline in the energy sector stocks pushed the S&P down by 1.56%. The Nasdaq incurred a weekly loss of 3.11%, and the Dow Jones was the only one to close with a 1.15% gain. Futures on the major stock indexes perked up in the New York pre-market. Moreover, the shares of companies with a mega capitalization such as Apple, Tesla, Microsoft, Amazon, and Meta were gaining ground following a sell-off last week. The fresh New York Empire State Manufacturing Index came in worse than expected for October. It could raise doubts among Fed's policymakers and could inspire the stock market. The index slumped by 7.6 points to 9.1 in October, much lower than the consensus of -4%. It signals a subdued business activity in the state for the third month straight. Despite the gloomy survey, the U.S. stock market went on growing as investors give priority to recent upbeat economic data and the strong report by the Bank of America. Stock of the second largest U.S. bank climbed 3% in the pre-market because the lending institution gained from a higher net interest income in the third quarter, despite the fact that it added $378 million its reserves to cover losses of growth. Stock of Goldman Sachs jumped 1.7% after the bank announced its plan to reform in the company structure, aiming to unite the investments and banking and retail businesses. The bank unveiled the news before the quarterly report, and this week investors alert to the other reports of top American companies such as Tesla, Johnson & Johnson, Procter & Gamble, IBM, American Express, and Netflix. As for the currency market, the pound sterling is under the spotlight today, while the US dollar is taking a back seat. The US dollar index has slipped by 0.5% to 112.5 from the previous high of 113 points. Being under pressure, the expected corridor for the index is seen between 112 and 112.8. Traders are shifting focus back towards risky assets, the sterling in particular. The greenback has lost the most, namely 1.5% against the pound sterling. The pound strengthened because the new finance minister, Jeremy Hunt, cancelled almost all parts of a mini budget and said that the government would bring down borrowing costs. Nevertheless, the long-term outlook for the US dollar remains bullish, displaying the advantage of the world's reserve currency. Bearing in mind high inflation expectations, the dovish shift in the Fed's rhetoric is unlikely. The central bank still assures markets that it will raise interest rates until inflation is pushed down to the target level of 2%. So Fed's policymakers are on the same page concerning the hawkish agenda. James Bullard stated recently that the red-hot CPI opens the door for a rate hike by 75 basis points. The loonie is taking advantage of the pause in the greenback's rally, and the USD CAD pair is trading lower at about 1.3750. The intraday corridor for the pair is defined between 1.3690 and 1.3810. The Canadian dollar is eager to assert strength following protracted weakness. The commodity-reliant loonie also owes its strength to recovery in oil prices. The culprit for growth in oil prices is mounting concern about disrupted supplies because OPEC and its allies, including Russia, agreed on further output cuts before the EU introduces the embargo on Russian oil supplies. Against this background, oil prices resumed their rally. By the moment of recording this video, Brent crude futures climbed 1.19% to trade at $92.72 a barrel. Apart from a new rally in the oil market, the loonie could find support from the Bank of Canada, and the central bank will publish the business outlook survey tonight. Senior Deputy Governor Rogers is due to speak later today. The highlight of the week for the loonie will be an inflation report which will be posted on Wednesday. The crypto market is opening the week on an optimistic note because of some weakness in the United States dollar and the growing appetite for risk. Bitcoin has been trading in sync to the high-tech companies of the United States. Hence, the token has been trading higher, having recovered by 1.6%. The flagship crypto surpassed $19,600. More gains are expected. Altcoins are also in the elevated mood. Ethereum has grown 1.9% and is now trading at $1,330, and today Bitcoin has a decent chance for recovery and further growth today. If the token settles above the landmark level of 20,200, it will be able to exceed the upper border of the narrow trading range and begin its move towards $20,600. Otherwise, the price will get stuck at about the lower border of 19,400. InstaForex team is keeping close tabs on financial markets to provide you with the market updates and accurate forecasts. Choose the right trading strategy with the InstaForex and see you online tomorrow.